Let's cap off this video series by looking at a few specific case studies, starting with the startup level, working to the venture fund level, and then concluding at the limited partner level. I'll start with Uber. For the startup, we'll tackle Benchmark Capital, which is venture fund, and then conclude with the Yale Endowment. I'll preface this by saying pretty much these three examples are the best case scenario, and it's what everyone strives to be. I won't waste your time telling you what Uber does. I'd be surprised if anyone watching this video has not taken an Uber ride before. I want to dive directly into the financing history instead. Uber started in 2009 and very quickly started raising money at a high pace and at pretty high valuations. At their seed and their Series A round, they raised about 1.3 million at the seed round, and then about 11 million at the Series A level. Investors bought stake in the company or bought shares in the company at under 10 cents a share. Fast forward throughout the last 10 years since Uber got started, and they've raised over $22 billion in about 25 funding rounds. And so they have financed themselves in an incredibly aggressive pace and have become a very large company. They went public in 2009 at $42 a share. And so you can see here on the specific investments, the seed investments returned 4,500x. And then the Series A investments were about 450x, which is a huge amount. Keep in mind the total return an investment fund might get on that company isn't quite that high because they're going to invest more money in follow-on rounds at higher valuations, which will bring the return down a little bit. But it's really not a bad thing because those investments are much more de-risked because they've been able to see that this is one of their breakout companies. So yeah, that's how Uber works from a financing standpoint. Benchmark Capital was a firm started in 1995, right before the dot-com boom. Their first big hit was eBay. They invested about $6.7 million in eBay's Series A, and that was their first hit. And that's the key thing. Most successful VC firms have a home run in their first fund. It's very hard to continue, especially very hard to become a top-tier fund without an early home run. And Benchmark has gone on to fund a dozen or so companies that are household names, companies that you have used. Uber is one of them. They were the Series A investor in Uber that did a 450x return on that. They also filed a lawsuit against Uber because of some of the practices they had against their drivers, but still successful outcome. And other companies they've funded include Twitter, Instagram, Dropbox, WeWork, Stitch Fix, Yelp, and Zillow, and the list goes on and on. So you can imagine they've had quite a successful run. And finally, the returns to the investors, to their LPs, speak for it. And with $22.6 billion returned to LPs over that time frame, a 1,000% return, 10x return from their investors over that period. Pretty impressive. Finally, let's take a look at the Yale Endowment. This is, I think, the most successful endowment when it comes to investing in venture capital. In 1985, the fund manager had been introduced to portfolio theory, knew they needed to diversify. The endowment was traditionally invested in stocks and bonds, and in the late 1980s, they diversified into a handful of other assets, including venture capital. That was the same time that Venrock was starting to fund Apple and Microsoft was getting off the ground, and a lot of these very successful companies. And so while it was a good overall investment decision, they really had good timing. And so they get into the best funds, and once you're in the best funds and the best funds get the best companies, that's really where you see the cream of the crop returns. And over about 30 years, the Yale Endowment has returned about 18 to 20% on their venture capital allocation, which is a very, very large amount, the highest returning asset class in their portfolio by a considerable amount. So much so that the Yale Endowment in 2019 increased their investment allocation to 25% venture capital, which is far higher than any of the average endowments. I think the average endowment allocation to venture capital is about 4.7% or about 5%, and so about 5x that allocation, and which is quite interesting, but has been proven to be very successful. This video and the video series has been helpful. It's been enjoyable to me. My name again is Nick Spiller. I am happy to connect with anyone if you want to reach out to me on LinkedIn, or here's my email as well. Other than that, I hope you take this forward and turn it into startups and innovation of the next few years.